Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody.
Morning, guys.
Hope you guys are doing well. All the chat this morning is just talking about how their football teams suck. So it's a good Monday. It's a classic Monday. I tell you what, not the Chicago Bears, because they find a way. Where there's a will, there's a way. And
it's very rare. It's very rare where there's, two questionable teams, but they're the Bulls and the Bears. They're having a little bit of early season success, and Chicago's so used to, since Jordan, not having high bar for their sports teams, and so a little bit of success. They're happy to take it. It may not last.
You do what you got to do. I mean, I get that, and. Yeah, I mean, listen, Titans suck. I think every football team somehow is terrible.
Yeah,
which is an interesting problem to have, guys. I'll say this: I have a dear friend, who's a football coach. He asked me last night. We were having a little church get together. He said, "Would you rather coach football or basketball?" Because he knows I love basketball. I'm gonna be honest. I told him probably football, just because of my personality.
Yeah,
basketball to me feels like it'd be a hard sport to coach.
You're right there with basketball. You're exposed. You're a lot closer to the game than any other sport, right? I mean, football, you're on the sidelines.
Yeah.
Baseball, you're in a dugout. Hockey, you're behind glass.
I mean, I'm not afraid of being hit. Are you saying I'm afraid of being hit?
No, I'm just saying it is a different thing, though.
It is a different. I love that would be the angle, though. Be like, dude, yeah. I mean, you could be hit at any moment. People get hit all the time on the sideline. That'd be fun. Listen, did you guys, Dan, I know you probably partied. Did you guys do any Halloween things?
Not too much, but I noticed, like, in the neighborhoods, the neighbors picking it up a notch in the last year. It just seems like they're spending more on elaborate yard festivities.
Yes. Okay, I have a question for you on this, Dan. This is for Dan, but this is for the chat. I live in just a normal neighborhood, suburban, Midwest, normal houses. And I feel like the decorations are getting darker and more intense. Like, it's not just like a witch on a broomstick. It's like some realistic half ghoul coming out of the ground to gnaw your face off. Am I imagining this, chat? Is Halloween are the decorations is it like everything? They're just getting more intense?
I think so.
Dan, what do you think?
I think so. And we spent the other night in at my daughter's house, and in the neighborhoods, they're having, there were a couple things like 13 feet high, and then they had the voice stuff going, right? The recordings. So it gets a little ghoulish or something. I mean, they're really, and I feel like I watched a few of the little kids come by, and they're like, wow, here's a 14-foot, whatever. And then you hear the voices. I mean, it's almost like a miniature. Remember the haunted houses when we were, the Halloween haunted houses? Even those have picked up. I mean, they hire professional actors, and the intensity is.
Oh yeah. I know the haunted house, and maybe that's what we're talking about, is that the haunted houses, you can, you can go on these extreme ones where they require you to sign waivers and all that kind of stuff, which like,
is that right?
what? Like I'll, and some of these do very well. So maybe this is just leakage from people that like those.
Yeah.
Setting up their yard. But
Yeah.
I just,
listen,
not my thing.
Shout out homeschool. And I always say this, homeschooling in the 90s when it meant something. Now everybody's homeschooled, but when I was a kid,
it's about scale, Troy. Scale just kills things.
It meant something to be homeschooled. So as a 90s homeschooler, I'll just remind everybody.
It's a 90s.
An OG.
Satan will always require more sacrifice.
There it is.
All right.
Complete with awkward moment.
Wow.
Yes, in true 90s homeschool fashion.
Well, yes.
Thank you for that, Troy.
I mean, listen, that's the thing. And so also, I will say I do want to get one of those 13-foot goals in the house, outside the house, but I want to replace the sound of it with Jim Cramer. And just that way the kids are scared, but they're equally scared.
There's no difference. Yeah.
You walk by it and it's bye, bye, bye. Bye, bye, bye. I would love that. So
that would be good. That would be good.
We'll work on that. We'll work on that for next year. One more thing about the coaching. Go to Origami Man. That's exactly right. I really do that squeaking basketball in a court, like the shoes, it really does bother me.
Ooh.
It's a hard thing.
Is it as bad as the blackboard in second grade?
Oh, that's tough too. That's tough too. I mean, if you ever want to see me get really angry with my kids, they'll scratch a plate or something. Anyway, so I know it's just a visceral feeling. Listen, we had, speaking of Halloween and darkness, guys, apparently this past week we had an indicator go off. These are my favorite things to read, weekend readings.
Okay, here we go.
Guys, last week,
yes,
the Hindenburg Omen was triggered.
Oh,
I heard of that.
What is this?
Explain that.
What is this?
Today, listen, I want to do a whole show on this tomorrow. Actually, I really do. But let me just go ahead and drop some knowledge about the Hindenburg Omen.
The Hindenburg. I love it.
So the Hindenburg Omen basically is triggered. Three things have to happen for it to be triggered. The S&P 500 remains above its 50-day moving out. And yes, I am getting this information from economictimes.indiatimes.com for what it's worth. The S&P 500 remains above its 50-day moving average.
Check.
Check. More than 2.8 of New York NYSE stocks hit 52-week highs and 52-week lows simultaneously. Third, the McClellan oscillator turns negative, meaning declining stocks are gaining momentum over the advancing ones.
Okay. So, is that based on George McClellan, failed Democrat Union Civil War general?
I would say it's probably that one. He returned home and he said, by God, if we can't beat is he south or north?
He was a north, Union general. So
he probably went home. He said, how can we beat these south? I don't know if we'll ever be able to beat them. I could tell you, though, when a stock turns negative or positive.
That
through an oscillator.
I'm just wondering.
Makes sense to me.
It might be named after him. Chat, help us out.
I like the title, though.
Hindenburg Omen. So, I mean, it makes sense, really. I mean, if you think about it in the sense of like, you have the market's uptrending.
Yeah.
You have a lot of churn underneath. I mean, hitting 52 highs and lows is churn if a group of them each is doing that. And the ones who are turning downward are gaining momentum over the ones turning upward. So that makes sense. I mean, from a narrative.
Yeah. Makes sense.
Now, I'm a glutton for punishment. So I saw on my YouTube channel last night, as I was scrolling, as one does on a Sunday night, I saw a live feed from an options trading group. I'm not going to say who it is or anything like that.
Okay.
They did say up front that they had an F in the business from the Better Business Bureau, and that we should ignore that.
Okay.
So that was fun.
What?
But there was thousands of people watching this live. So I thought that was really interesting. But they're talking about the indicator. They're talking about, hey, we're about to crash. Like, I have seen multiple things this week say this week we are going to crash.
We're like 2 days from an all-time high. Like, I'm not saying we're going to an all-time high in just 2 days. I am saying that we're like, what are we going to open up? I literally put off looking at futures successfully until after the show started. We're up 22 points. So we're going to open up around 68.60. What's the all-time high? About 1% from there, right? Chat, help me out. I think about 6,700.
69.50?
Didn't we? I thought I don't know.
We didn't break 6,700.
Here's my point,
sorry, 7,000. Jeez Louise.
Yeah.
I think we're like 69.50.
Okay. Yeah. So, I mean, the counterpoint to the Hindenburg Omen is when you Google it on the Twitter. Is that a thing? Can you Google something on the Twitter? That's how evil it is. Google's just,
all right, boomer. All right,
just taking over the search.
Yeah.
Hey, can I
correctly predicted 47 of the last 2 crashes?
Hey.
Who did?
The Hindenburg Omen.
Oh.
Like, there's all these charts about how terrible it is. Now, I'm guessing one person made this chart, which may or not be accurate, and everybody else is retweeting it. So somebody needs to check it. But
yeah, I think
Dan, what you say?
I think I think of the term examine yourself. I mean, I remember, you think about the psychology of newsletters, right? And I remember when I was standing in the trading pits in Chicago.
You were in.
I was in the pits, and we didn't have a great world-class back testing. But in the back, you stand on a step all day, and my back would just get, as you started getting into the late
I can't
30s,
imagine.
Yeah, it would get bad. So you'd go up to the library and you'd sit there for a half hour and be all the people. Actually, the pits are more of a young guys game standing in there, and you'd read the CBOE bought like every newsletter out there, Joe Granville, Marty Zweig, for those who are older. But, when you think about, well, what newsletter do you tend to read? Granville was always, he was the world's going to end. He was the Hindenburg saying the world's going to end, the world's going to end. But he was consistent. And even, I think in the 80s or 80s, even if the market went up 8 years in a row, he still had a really good following because it's what do you feel, right? If we asked everybody in the chat and said, what are you feeling? Oh, we need to go down. We need to go down. Well, they're not going to go for a bullish newsletter. You're basically looking for a newsletter that agrees with your, what you think, right? Or your fear or whatever. And I think that's what it is. I mean, because I'm like, how can this Joe Granville still be in business? Whereas I think the more Marty Zweig was a guy that was more, I think, level-headed. But I think we're all like that, right? We're saying the market should go down. We should have another correction. And to get the thing going, we want to follow, if we're going to follow a newsletter, we're basically following one that goes along with us. It's interesting psychology because I think we all feel the same way. You look at the SPX, even over the last 6 months, I could work myself into a frenzy. SPX is up 22% in the last 6 months, right?
Yeah.
And you're like, this can't happen. It's got to, 2 years previous, we've been up 20. They've got to tank this thing, right? And you could work yourself into a frenzy instead of just focusing on what's in front of the market, what's changed. Hey, there's a euphoria with all this tech and AI stuff. And hey, trade what's in front of you, but it's hard. Right? You want to go for this is the next, COVID correction or the whatever. So anyway,
it made me just realize what you just said is so true. Those newsletters, it really is like romantic literature for financial traders.
You said
it's like you pick your genre of like what you want.
That is fascinating.
And you're like, I want this market to crash so bad. Yeah. Let's see what this guy said. Like that's, I agree completely. Now, I will say this as someone who desperately wants the market to crash. I think what'll be interesting this week to see what isn't a fiction, it is a fact, is that the repo market's having trouble. And so I'm gonna let you guys, we'll talk more about that this week a little bit, but the repo market is a lot of times a sign that some stuff's going on, and basically the market, the Fed's having to provide liquidity overnight right now for banks. And that is a, but here's the thing. It could be due to the shutdown. It could be due to month end tax stuff. There's a million ways that it might not be ominous.
And isn't also kind of, I mean, is that not, I mean, one of our Fed experts, Jay Powell, if you're in the chat, please weigh in. Isn't providing liquidity, I guess it's complicated, but I mean, that doesn't seem off base with the cycle that we're in right now, I guess. I don't know.
Yeah, I just trade.
We're trying to get Jay Powell on the show, everybody. Yes, we're trying.
I'm trying to get 5% on a DC. That's all I'm trying to do. 10% on a DC. Shout out Sheridan for teaching me that.
No, but you know what? And here's another thing. Why? I mean, when you think of what's going on in the market right now, and instead of enjoying it, you're looking at, we're range bound to it. You got range bound, you got, VIX is not at 14 or 15, and we're coming into a week where there's basically no news this week. Not that things can't happen outside of that, but there's no, wouldn't you agree? There's no major.
Well, and I think it's still confusing about with this shutdown, like,
right.
What news is going to come out, and can you believe it if it does? I don't know.
Right. Yeah,
I think the shutdown is like this shutdown to me, for the length of the shutdown, seems like the most. I don't want to say most, like least impactful on most of society. I think for some people it's obviously highly impactful, but for a lot of people they don't even know what's going on. Is that fair? Many or most Americans, it's not impacting their daily lives. Maybe another way of saying.
Unless for like, what is it? The snaps? Is that the big thing they're saying that could be affected a little?
Right. Yes, but that's not most people. So I guess what I'm saying is, I think most people, I don't think. Yeah, I would agree with the chat. Good Origami Man. We've been desensitized to shutdown news. I kind of think so too.
Yeah.
What's a psychop?
Oh, here we go.
All right, here we go. So,
conspiracy corner every Monday.
Listen,
this is a conspiracy show with options content.
Speaking of a psychop, guys, I'm going to be honest with you. I test a lot. I do back testing because option omega, right? I like to back test. And there are times when back testing to me is tedious, particularly type of strategies that I know I'm not going to trade. To be honest, it can be a little tedious. This weekend, Papa Bear got real excited about some back testing, and I'm going to share a test with you today that when we first launched Option Omega, shout out Wizzy, a couple people in the community had a 1-2. Okay. Matt was part of it. We had a 1-2 double calendar. You remember that 1-2 double calendar?
I remember. I do remember 1-2 in 2022. Yeah.
2022.
Yeah. It was probably midsummer is when they kind of took off.
Yeah.
And there was a time when they were good every day.
Oh, they were good. There was a time where we would say to ourselves, this is the only trade we'll ever need the rest of our life.
Yes. I do remember saying that.
Yes.
Also saying that about 6-7s.
Yeah. Oh, 6-7?
The legend. We named it the legend.
All right. So I've got a test for you. And this is the coveted one. This is the one that all the kids want. But you can't. I'm not even going to share this test yet. We will share it as the week progresses.
There you go.
But we're not going to share it. And people are like, just send the test. No.
Yeah, you can recreate it if you want.
Yeah, you can watch this video and do it. It's fine. But I'm not going to share the test. I'm going to give you guys a 0-1 DC.
Okay.
Okay.
All right.
I'm excited. I'm a little nervous. And then I want to tell you why you shouldn't trade this yet.
Yep.
Okay. So let's share it.
A concept not to act on. What in God's green earth?
This is a 0-1 double calendar.
Okay. Yes, it is.
It is if we were doing a trade of the year, which we should do a trade of the year segment at the end of the year, we had some fun the first couple of years with that. We'd have a big old show, tuxedos, champagne. This, in my mind, would be at this point, would be in the running for trade of the year. Okay. Matt, what are we looking at here?
I've got to pick myself up off the floor after that. Trade of the really? Okay, this is
Matt, it's a 74 MAR.
It's got 5 cents excess slippage. It doesn't have cap profits, and it's a 5% profit target.
Don't worry about it. It's trade of the year.
Don't worry about it. All right, this is a daily trade that's based on percent, which is super interesting. So it is you're calling it a calendar. This would be diagonalized though.
That's correct.
Actually. So this is a double diagonal, and it's what you would call a classical. Well, I don't know if it's called, I would call it a classical diagonal. When most people say diagonal, they're thinking of a short diagonal. So that's what this is. If you're interested, by the way, in a long diagonal, the gentleman on this show, Dan Sheridan, released an excellent video this week.
Shout out Dan Sheridan.
Shout out Dan Sheridan. We will drop a notes on long diagonals. It's fascinating. And I will drop a link for the show. If you don't want to click to YouTube, I'll put it in there. And that's what it is, though. You're entering every day at 9:32. It's got a very aggressive profit target. Yeah, find the Punisher as part of the rest of the week. Find the Punisher. But here's the thing. It's a very aggressive profit target. So it doesn't need much to get to a profit target. That's what I would say about it.
So what are we doing here? Let me talk. We don't talk about this a lot, but I want to just spend some time this morning talking about theory a little bit versus the test itself. I don't want you guys to be so quick to be like, let's trade this. You shouldn't trade this. I'm just to be honest. You shouldn't trade this.
Love it.
But I do want to talk about why this theory is interesting of what's happening. Okay. So why choose 0.7, 0.9?
Yeah, that's my question too. Why choose that?
You guys have any thoughts about why that might be the case?
Well, you get one thing is if you're, as Matt was saying, if your longs are further out of the money than the shorts, right? Is that correct on this? So you're going to get more of a double outside diagonal, right? Where your longs are further out of the money.
That's right. That's right.
But you're gonna get more positive theta, and so at least it would make sense for this one that you would get you have a 5% more aggressive profit target. You can get it. You're going to have a better chance maybe to get some of your theta quicker. The problem is versus a DC, you're spending more dough, right? Your margin's going to be higher on this also, right? That's at least from that point of view.
That's exactly right. No, that's exactly right. So here's the theory with diagonals, with this in particular. And this could be a wrong theory. I'm saying theories are wrong half the time. So I'm not saying this is right.
Yeah.
You doing a little bit of research, not really enough to say with any validity what I'm about to say. The idea, I think, of this, or why this might work, is you're looking at it like a daily annualized version of VIX levels.
Interesting.
And so when I said this is the 9 versus 30, now this is not true because you'd have to change this every day. So I tried to pick what I thought was the average of the year. If you looked at the average of the year, not take the distribution and take the tails away. If you annualize the VIX, Tom, that's good. If you annualize the VIX, the 30-day, right, on any given day might be 1.10%. The the 9-day VIX might be annualized to where it's like 0.9%. And that's the spread on any given day, 0.9 to 1.1. So all we're doing in this is kind of trying to take that width and moving it in a little bit to get a little bit more premium, or make it a little bit more realistic that you might go to the point. Because for a double calendar or for a diagonal as well, you want it to approach closer to those poles as time runs out. Does that make sense at all?
Yeah, I just think it's super interesting you're doing percent instead of a delta.
Yes.
Because percent does not take into account VIX levels at all. It's just a percent. And so I just think it's interesting. I don't have a comment other than that's interesting.
Would you guess maybe Troy or Matt, when you're looking at this, my guess would be 0.7% up or down. Maybe you're not that far from a 20-25 delta.
Yeah,
short,
against maybe in most VIX environments, but like what would this be? What delta would this be in May or in April?
Well,
like
let's go
yeah,
look.
we got a bat. We can find out.
Oh, in
We
April.
can find out. We can find out.
It's super interesting. It's why the pricing's all over the map too. Some days it's $25 and some days it's 70 and some it's $7. Jeez.
Wow.
Yeah. That was
$70. Jeez.
Click on the graph for that one for the 7th, Troy. Yeah, I mean, I think that's a legit fill.
Well, I mean, here's the thing. This is what is interesting. I know what you're saying, and I'm not disagreeing. But, I mean, you guys, particularly Matt, I don't think I was at the time. Matt has some DCs where, like, you were paying a lot, I think, for some of those DCs that you got like 100% on.
Yeah.
I mean, the price is going to rise.
Prices. And I actually, just from a preference thing, I actually prefer trading more expensive DCs because, again, the black swan risk with the DC, if you have a global event that causes a major event, the black swan risk is units, and slippage matters less. If you have a $50 DC, slippage matters a lot less on a $50 DC. If you get 15-cent slippage, if you get 15 cents slippage on a $5 DC, that matters a lot. So I like more expensive DCs for sure.
I'm gonna try to make this a little bit more realistic so that doesn't hit me.
No, that's for the rest of the week.
Well, listen,
yeah, I would say 15 cents would be. It's not. Yeah, it doesn't change it that much. It just makes it harder. There's a couple times when it gets, because here's the other thing. You have no. I mean, I'm guessing this is intentional. You have no exits and no rails on this, which I'm guessing we're going to add. Spoiler alert.
I will say this. We're along for. I got so excited this weekend. I said I'm going to leave this right here because I think we have a world-class research team in the chat in Option Omega that's going to take this thing somewhere special by the end of the week. Now I'm going to be gone. I'm going to California this week, but I'm going to let you guys figure something out special by the end of the week. My goal is just disruption. But I will say this. This is why you shouldn't trade it. So you might look at this and you say, I take that all day. A 0-1, you get a couple of occurrences a year. Like, I'll trade that all day. Let's talk about why you shouldn't trade this. Okay. One of the reasons Matt just said was we have no rails. So let's look what happens if you go back in time and you add some more occurrences without rails.
And by the way, while you're doing that, people have asked for the backtest link. We explained at the beginning of this, we're not posting the backtest link for this one. You can recreate it. We're going to be working on it all week. The link will come later.
So that's not great.
Bruh.
That's not great.
That's a good summary of not great.
That's when you see a chart like that, you don't have to be a master technician to see that that's not the direction.
But Troy's got an 88% win rate.
Oh, it wins 88% of the time though. So maybe that count. But here's the question. How could such a good test, like here's actually like,
yeah,
jokes aside, like research time, how could anything be so good year to date? What has happened this year to make this thing go well? Well,
That's a good question.
The first step is it's just you've been lucky this year. You haven't been blown out, and eventually we show you that with enough occurrences, you will destroy your family with this trade. So, but Dan, I mean, what's going on this year to make this trade? Why does it work so well this year?
Well, I mean, I think if we attack, how do you lose on these? Again,
that's exactly right. Yes,
bring everything down to the basics on a double calendar. I mean, there's only two real ways you can, maybe three, lose money, right? Okay, so number one, price movement, right?
Yep.
If it's, and this has been mostly an uptrending year other than April, right? And so you have the, pretty decent room on this, low 20s delta. The other thing is the volatility of your long, right? I mean, that's, and you could put volatility of your long plus some type of short long ratio. How does that middle of the graph look, right? And you're really susceptible to that long, right? Especially if you're going to stay. You don't have an exit. Are you getting out at expiration on this?
No, letting it ride 5%, or whatever happens.
So you're out of it on 0 day. You're out of it at the end of the day.
Yeah, and it presumes, again, the backtester presumes that when we expire that we've closed the trade. So in reality, you'd have longs.
Yeah, I mean, so really, it's that volatility of the long intraday, right? I mean, isn't that the whole ball game in terms
of the whole ball game, and you don't want to get blown past the short.
That's it. Right.
To your point about why does it work this year? I don't know the answer, but an observation is that the trade you showed before going over 3 years still had an 88% win rate. So I think the poor man's answer, when you have that meme of the smart guy, the poor guy, and the guy in the middle, the poor guy would just say, you missed the big losers. Like, I think that's what you would say. Just this year was random. You didn't miss the big losers. I don't know that I'm the guy on that end of the curve. So, I mean, 88% win rate. I mean, you only need a couple huge losers. What's this graph, Troy? What are you doing?
Let's look at it.
It is.
Let's look at it.
If you don't know what Troy's doing, if you're on the automation tier, check the model tab.
Big announcement Friday for those on the automation tier. Go back and listen to Friday's show. You've got access to this now. It's in beta. So it looks like a double calendar, right?
Yeah.
I mean, this is the double diagonal short. When the spread's not that wide, it'll take the shape of a double calendar. So what do you want to have happen? Well, let's assume during the day you're trying to get just some of that. That's all you're trying to do in this trade, is just get a little bit of that, right? Without that happening, right? That's kind of the name of the game. So the two ways, if you look at the losers in this trade log, the two ways that you lose are either getting blown out completely, or this line just stays here all day.
Yeah.
And this is where, because really what's going to happen at that point is you're going to get kind of that. Yeah. That's what you're going to get, right? And so it's really similar to a double calendar. You've got more risk if it blows past you, but it's really similar. Why diagonalize it? And I see this a lot. People talk about the diagonals don't work. I maintain there are plenty of tests where diagonals work. You guys just haven't found them yet. But you have to, one of the secrets of diagonals is it's not a set it and forget it game. You have to manage it. You have to get out early. You have to take profit targets. You have to do all the normal trader stuff in it. And I'm treating this one very similar. So you have to do that. But what I'm going to do real quick, I will do this. Let me.
Well, and here's the other thing about this. Again, if you haven't checked it out, we have a video series on our YouTube channel called The Doubles that Dan has done. And one of the points he's made is that there are strategies that are related, and a double diagonal has a cousin in the iron condor, and they are related with a short strangle. And Troy, if you changed either the zeros to a 1 DTE or the 1 DTEs to a 0, this would simply be an iron condor. So for people who are maybe struggling wrapping their mind around it, that may help them visualize that this is indeed a cousin. It wins differently. The Greeks function differently in this because it is calendarized.
Yes.
Yeah.
Yes. So did you want me to change something? Sorry, I was.
Yeah.
Did you say?
No, you shared a model. I love it.
Oh yeah, we'll share a model because a model can't hurt you if you don't let it.
I mean, it can hurt you if it. Yeah, right.
If you don't let it, is the key. So, Dan, I mean, listen, I think anytime you can kind of increase occurrences by doing type of DCs diagonals at a 0-day level, that's always the grail to me.
Yeah, it's you know what? It's my experience over the last 3-4 years with double diagonals, and I love double calendars, has been more in the 9 to 15 day range in SPX. So a lot of times, I mean, probably the most popular one would do is be like today. So you put on Monday today, you would put on 11 days. So a Friday, what's a week from this Friday? I believe that would be 11 days. Am I correct on that? So we would go a week from this Friday. So we would sell Friday, a week from this Friday, 11 days out, and then buy 15 days out.
Yeah.
And we would sell maybe a 30, anywhere between a 30 and 35 delta on the shorts. And we would buy the longs 10 points further out of the money. We've been doing this for a few years in terms of that type of duration. And generally, but we haven't been, that's been more, and I continually screw up the word, not subjective. What's the word, Matt?
Discretionary.
Discretionary. We watched Moneyball last night. So Brad Pitt would turn over to, what's the answer? And he would go, base percentage.
When I point at you, do you want me to speak? When I point at you, yeah.
Oh yeah, that was it. But the way, like Troy made a good point, and Matt, what if we put it on Monday, I'm looking 80% of the time, we're just looking for 10%. So get out by Wednesday, right? So a lot of times you're getting out before a lot of the news events that come out and will pollute Wednesday afternoon, FOMC, Thursdays, different things like that. So generally that's worked pretty well, but I think you have to tweak it a little bit. That has been the main on that. But one thing I'll say, changing durations. If you're doing 5, like I've done maybe 3 of the last 4 Fridays, I was working with Matt on of 5-7 DC and a 5-7 DD double diagonal. Well, the thing is, again, I've always said double calendars are the best pound for pound fighter in the world. DCs, because you're putting 25% less capital, easy, or maybe 30% depending on the trade, your yield's going to be better, right? So it's you're right. They can, I don't know how to say it. You're getting more theta on the double diagonal, but it's more capital. So the DC can still get the theta. So I've noticed not a big difference between the 5-7 DC and the 5-7 double diagonal. The DCs had a better yield every time. Yield.
Yeah. That's what I found too. I think there's still a lot of back testing to do though. Like the more I back test DCs and find structures that I like, it's almost like, well, it's just like further up and further in, there's more interesting ones that Troy's nodding. But here's the thing. I sent Troy a message behind, here's a peek behind the scenes for the chat. I sent Troy a message earlier on the show and I said, 01s are like the holy grail for me. Like I've always just loved the idea. Could I find a DC that is close-ish to a condor, or a DD that's closest to a condor, that I could trade on a more frequent basis than certain setups that only can be traded on certain days? So I'm super interested to see. I've played around with this back test and I've made it really red. So that's good. That's
say
good.
One thing. I mean, to me, if you had to say what it comes down to, at least for me to enter this 0-1 type thing, like on a day like today or something, when the market opens, and let's say, what time was this trigger to go off, Troy?
9:32.
Okay. Right around 9:32. Okay. It vols down. I look at my long options and say, am I scared? Am I fine with the volatility of my longs? Would I, and here's the ultimate question, would I forget my shorts, right, for a second? Would I be comfortable buying a strangle one day out on that? Am I comfortable? How comfortable am I with those volatility numbers? And if the answer is, hey, you know what? I'm pretty comfortable. You know what? I'm in. Because that's really what it comes down to, right? Agree? I mean, unless you get the big move, but by 9:32, at least you have an idea, right? Is the world going to end, or is something crazy going to happen? And it's really, are you confident in the vol numbers? I mean, to me, of the longs.
That's exactly right. That's especially short-term, short-dated like this.
There's enough Vega to sink you, right?
Yeah,
there's enough Vega in those things to cause some pain.
Absolutely. So the question is a great question to end on, Glenn. We're going to continue down this road this week. Will this be a Indiana Jones type Holy Grail, or will this be a Monty Python type Holy Grail? I think that is to be determined. But I will say right now that SPX Daily's lost to me. That's just a flesh wound. Yeah. So we'll see what happens. But listen, guys, if the Hindenburg Omen goes off again, I will be in the bunker tomorrow. But otherwise, Matt, you gonna say so?
Yep. Since we started talking about the Hindenburg, market's up 10. We're at 33 ES plus 33 ES, probably looking to open somewhere around 65, 70 in the SPX. Everybody stay safe.
That gives me more time to take on my